Everybody, Day Trader RockStar here with a great video coming your way. This is a very important topic that is almost just as important as our foundation indicator, stochastics, and divergences. We're going to be talking about channel lines and trend lines today and how to draw a proper channel line / trend line. Now you need trend lines and channel lines. Well, let's start from the beginning. Basically, trend lines and channel lines are just directional support. A lot of people use them for trading just to give you directional support levels. These are areas that go in a straight line. If you have 2 points, and this is you're gonna learn a very important concept today, and this is our most basic but most important concept. And I kind of like to say that I coined the term and the way of identifying these channels and making it very, very profitable. The channels in a market are basically just a range-bound movement in one direction, and it stays typically within a range. It could be, if we take a visual look at the chart here, you can see it moves up, it moves down, it moves up, it moves down, it moves up, but it stays within this tighter range. You almost could define that by 2 lines. Now, how do we define a channel line or a trend line? Well, basically, you need a point here and a point here. You need 2 points. 2 points, or what I like to call pivot areas. One pivot, it's where a pivot is when the market goes from one direction to another direction. And that area right there is called our pivot. And pivots are where we kind of base there are points. And you only need 2 points to make a straight line, and then you extend that line all the way out. So that's part of that's the basic trend line. Now, to establish a channel, the object is to actually identify that channel as fast as you can, because channels, remember, you have to have 2 lines or 2 points to make a straight line. So at one point, you're going to have two pivot areas. Now, it could be here, it could be here, it could be here, it could be here. It doesn't matter when you identify it, but you want to be able to identify it not after the fact. This is all after the fact that we're showing you this. But during the day, if I'm trading the markets and I'm looking at this thing, I'm looking for my pivots. And if I see a pivot here and a pivot here, I'll drop a trend line there. And then what I'll do is I'll go up to the top area here and just say the market's about at this point right now. We're about at this point. So I'll say, oh, a pivot, 2 pivots up here, 1, 2. Now, you might say, well, this extended all the way up. How do I not know not to put my trend line up there? Well, you don't. My videos packed full of information, but sometimes they're all over the place. So we might touch on important concepts that should be taught right in the beginning. But this is one of the important concepts. When you see a candle, your candle has a defining size to it, and that size represents the highs, the low, and the other part of the candle, depending on where the body is, represents the open and close. And so you have that information, but we're really paying attention to the closing prices when we get to candles, when we do trend lines. And what do I mean by that? A lot of times you'll see a big extension on a candle, like here, over here, this right here, this shadow, tail we call it, and it kind of pushes up, even though the trend line looks like it's pretty well established here, but I'd never count that. I'll take what the established line has given us early on, and if we break through it and then come back and test it, that means it is rock solid. And it typically does this. This type of thing usually could almost spot it with news, because look at the volume spike there. Technical analysis is trumped by news. And I say trumped as being beat, but Trump news will trump technical analysis. And in this day and age, news is coming out, and we see a lot of this. And this is kind of almost a trap for traders, especially futures traders, who get that spike and then you see it fade right back in. And we see that so much. But again, if you learn the method I teach every single day, live on Day Trading Radio, I didn't really even go into introduce myself too much, but that's because I love to teach trade. I've been trading since 1996. And I am a divergence trader, a stochastics trader, and I've also developed a couple of indicators that help us time the market great. One's called a quad rotation, And with that is, we add our trend lines and channel lines to it, and this gives us such a high probability chance of success in the trade. It really is. It is the best setup you will find. And part of that setup is understanding channels and channel lines, because that's where our majority of our trades are going to be, are on the lower trend line. So you have to know how to make a good channel line / trend line. So when we have an extension like that, we don't typically put our trend line up there. We keep it at the bottom, keep it at the bodies. So and let the chart talk to you. If you could go back out and say, well, this has been holding up, and you're just building a chart out at this point, and you see this over here, but then you see this. This tells you should be able to see this pivot and this pivot all lined up perfect. And then it came up here, and this was just a new spike. We pulled back. This I'm always watching for. This is one of the best trading opportunities, is when you have a breakout of a channel on type, kind of on volume, but it doesn't hold and it comes back in, and then we retest that line that broke before. That line will hold. It'll hold like you wouldn't believe it, and it always holds. And it's a technique. It's a technique that I trade. It's not one that shows up every day. But you have to be in front of the markets. But it's a very easy technique to understand how to trade that. So anyway, we're always on the search for channels, because our trading takes place on the lower part of the channel. Most of what I call my HPS trade zones or playbook plays, there's about 3 to 4 of them. And these are basic. Here's our divergence. All right, you have a double bottom divergence, higher, low, and a rotation. That's our trade right there. Here's another or this might be a quad rotation trend line. That's a setup here. So we have these playbook trades that you learned trading with me. I'm not going to go into this in detail, all these great setups, but the channel line and trend line are coming as supporting indicators, really. And it really is important that all these things line up. So if I have a divergence, I take any divergences. But if I have a divergence on the lower trend line, I'll take a bigger position. I'll be more aggressive with it, because I know it's going to work out. And these are where you're going to make the big money. It doesn't happen all the time. If I circle the areas that we're going to be trading, then you're going to see that the circles are going to be far and few between, but all those circles are going to be rock stars. Like here's a good example of, this is what I'd be looking for at this point. Let's take a look at this fast. Now, there's a couple things to learn about this. So here's the market. Even though I know, I did see the chart there before, but just showing the concept, we have a lot of activity here. Once I start to see activity, let me fix that. That all kind of starts to rhyme together. You start to see these extensions being tagged once, twice, 3 times. Once I start to see 2 pivots and I extend that to a 3 pivot, and then I have something underneath it, I'll just drop it down like that. So we have this kind of a trend line. I'm always doing this. It doesn't matter if it's going to play out or not, but I'm always doing it. And eventually, if we do see we have a break of our channel, whenever we have a channel and a break, that becomes our major pivot. So here is a major pivot up here. So we know is going to probably use that to start our next trend line. So that trend line is going to start at that point. And typically, we're going to bounce up to it, and then we're going to pull back, and that's going to be your second pivot. And then what I'll do, if there's a pivot underneath, usually it'll be a pivot between these two. The top pivot, the second pivot, and then there should be a pivot underneath this, in between them. So if we do that, that's where I start off and I'm looking at the closing price. See, I don't go to the end. I'm not going to details here. I'm trying to bunch it up. I'm looking at the average closing price. Even down here, this could even come in a little. But I just throw them in because it's a range bound thing. We just want to make sure that we're inside the channel when we take our trade. And we'll talk more about that in a second. Now, now we have 1, 2, 3. So now that we have developed what we call a 1, 2, 3 channel, you're looking for 4, 5, 6. Now 4, 5, 6 are other touches of the channel lines. Now it doesn't have to be doesn't have to go in an order. It doesn't have to be 1, 2, 3, 4, 5, up, down, up, down. Lots of times you'll see 1, 2, 3, 4, and then a lower low 5, and a lower low 6. And each one of those tags on the trend lines, if they correspond with a quad rotation or a divergence, that's usually your bottom. So now we have an established channel here. And what do I see here? We kind of have we kind of have a nice little dip down there, and I see that at that point we kind of have a very high rotation on the stochastics. This is what we call a relative divergence. I want to call, because it's in the lower trend line, we know that we have a 1, 2, 3 channel. We're watching for, as the price gets down there, for a couple things. We're looking for a test of it, and if that test corresponds with a quad rotation. In this case, the quad rotation requires all 4 stochastics to be oversold. In this case, it's not. So the other thing we look for is a bounce and a retest, and take out the lows or a double bottom. And if that happens and we get that higher low, then we consider that a divergence. And because it's in the channel, that's where we typically want to be in this trade. And you put a stop underneath the low. So then that would be considered a divergence. But that's a hard divergence to read because typically we look for a divergence to be a low and a lower low. In this case, you don't really have that. You do have that candle coming down, the closing price. It's kind of a sloppy, very sloppy. So I'm not even going to say that we would call that. Maybe that would get by us because we're too waiting, and it's not on that lower. We don't have a new trend line yet anyway. So anyway, I'm just going to bring this in. And here you have, you could see it did start moving back up and it held that trend line. Now at this point, I'll start to see that trend line and I'll probably put this pivot in. Well, let's move this over here. I'll probably just start throwing something like that just to kind of keep an eye on it. We have a pivot down here. We might even later on go like this. We might, or might even look at something like this because this candle was a flush and it came back. But we build these out. But this is the important trade. That trend line continues to go on. The market comes right back down to it. Look at that. And we're not really in a setup here other than just a trend line. We have that 9-3 rotation, which is good. And it bounces off that trend line. Just proves that the trend line is, in fact, something to be paid attention to. And in this case, you're actually in a nice little pull back to the trend line, bounce, again back to the trend line. Again, kind of, it's not really a setup, and it's very volatile too. This is kind of volatile. I kind of recommend to people being out of the markets this week or trading very, very light and not trading your own money. I just think the ranges and the volatility in the news is so extreme that you have to let the market give you the good conditions before you start going fishing. Don't go out there. But here comes my analogies. If you have those, you gotta go hunting in the right environment. So here we actually have a breakdown. Now, this is at 11 o'clock. There's probably news that comes out. This was, I don't even know what day this is. But I just went back to just show you the process of building these trend lines and channel lines. So here we actually, once I start to see, there's really nothing here. I wouldn't put that in. This is really, really a steep breakdown. This is after the fact. So we had a high pivot here. Remember, we have a trend line and then the breakdown. Trend line, the breakdown. The breakdown actually has 3 little things, and we just extended it. Once it gets down there, we can see it's, maybe there is something. And what we'll do is, if we have 1, 2, I usually put that 2, those 2 pivots in, 1, 2, and then what I'll do is make a parallel trend line, drop it to the lowest point between the 2 pivots. And that will be our bigger trend. And as you can see, we come right down and look at that. We nailed it. Nailed it perfect. You just, that's why this works so well, is because you're identifying the levels before everyone else. Now, you have something else special going with here. You have our quad rotation set up. So every time you have that vertical line, that's kind of a quad rotation. And if you have that I put that vertical line in when we're discussing the markets live. And I said, all right, we got our quad rotation. What else do we have? Do we have 1, 2, 3 pattern? Yes, we actually have a 1, 2, 3 pattern. This would be 4. We also have a 1, 2, 3 pattern here. 2 straight lines. you would put that, you would use that low pivot. Just looking at so many different trades here. So here's your quad rotation. Here's your lower trend line. That's the big one. This big 1, 2, 3 channel. We're waiting for it. And then you have that nice bounce. Now, this video is about trend lines and channel lines. It's not about when you're going to take your exit off of here. But as we know, and a little gift for you, when you do have a nice bounce in a downward trending market, you want to think in the back of your mind that, I'm not calling the bottom here. It's not like my entry right here is going to be the best entry. It's most likely the current trend is going to continue. You're catching bounces. We're snipers in this market. We wait for our setup, we take the trade, and we take the profit. So how do we know when we take the profit? First of all, are we trading under the 200 period moving average? Are we trading under the VWAP? If we are, and the obvious trend is down, and we're in a downtrending, we're in a trend line, and we're in a channel down, then most likely this is going to continue to head down. And this is actually a textbook, what we call a bear flag. A bear flag pulls off the 20-period moving averages, gets oversold. In this case, we had a quad rotation, so we had that bounce. And right when we start to get this bounce, if this stays under 20, and this rotates up to 80, and this holds under the 20, that's our textbook bear flag. But if this doesn't have to get to 80, it could be a weaker flag. It could be a very good flag, like a weak, strong flag, or, a flag that definitely is going to work, and it doesn't get the full rotation. That's something we always have to watch for. That's fine. That's fine. I mean, that's a perfect flag right there. Now we come back down. Now we have 1, 2, 3, 4. So we put these 2 trend lines in, we extend it all the way down. We have that 2 trend lines up, we extend it all the way down. Here we have these small channel lines. Now, once you start identifying the bigger channels, and if you look at your chart, I'm trading on a 1-minute time frame. This would be totally different on the 3-minute time frame, and it would be a little bit different on the 5-minute time frame. But as you tighten up the chart, like if we could go back, my average channels are always going to be about the same. If you visualize them, and you can see it, it's not like the market's going hundreds of point range. It's staying with a tight range. In this environment, that could be 20 points, 20, 30 points on the ES inside of a channel. Typically, maybe it's, it could be 6 to 10, but things are so volatile now that you get much bigger ranges. Well, in any case, you get the breakdown here, and you come back down. Now, again, what is the criteria for an entry? It has to have, if the only reason you're going to take a quad rotation, which everyone loves, and I tell people, be careful on a quad rotation, because in a downward market, this could get you in a lot of trouble. You could be getting run over. The bounces are not going to be big. So the only time you're ever going to take a quad rotation, if you have a divergence with it or a trend line that comes from a 1, 2, 3 channel. So here's a trend line, here's a quad rotation. You have kind of an okay area there to trade. Now, how do you know you're not here and it goes down to this candle? Just little things that we're gonna probably wait for a positive candle, to kind of keep you out of that flush. Or I always say close your eyes and buy that trend line. Have confidence in the system. Have confidence in the system. You're never going to buy the bottom unless you buy the fear, and you're never going to sell the top unless you sell into greed. You're not greedy. You're like giving it as they want it. That's the only time you could ever catch the top. And the same thing, you got to be buying when it's selling. Holy crap, it's going down. Why is it going down? I don't know. I'm not getting in. No one's getting in. But that's you're never going to get the bottom unless you buy the fear. But we have things that tell us when to buy. And one of the things is and if you, again, if you don't know what I do, I teach a divergence stochastic methodology based off of 4 stochastics, but using the George Lane divergence style trading. But a little, we added a lot of things to it, especially the underlying 1, 2, 3 pattern. When we add that to any of the setups, it goes from 85% success to almost 95. I mean, there's always that chance of a breakdown, and there's always saying, well, I got in late and it didn't move enough. but it will move, and that's our job, is to be, conscious of the setup as it's setting up. That way you can take the best position. Here is a great example. We're down on the lower trend line again, and we have that low, which is a quad rotation, and we get a bounce, and then we have a fast rotation back down right there. And it's a much higher low. So right at that point, that's a big candle, right? Maybe you catch a bad fill on that, and you're like, wow, I'm going to get in here, and they start pulling back, and what if I'm wrong? That's, it's a 40-point mistake right there. Who wants to deal with that? So I'm not saying that's not, if that falls outside your parameters at risk. And what I would do is, and I have a technique that kind of keeps us in that. So here's our channel that we're in right now. I didn't even put that channel line. So we got it. If you could get inside the channel, here's your down channel line. It's touched it here once, twice, 3 times, 4 times, 5. So you want your trade in here. You want to take it out off of here. If you're getting in outside the channel, it's too late. You don't take the trade. Unless you get you get the pullback. And if you want to take a shot on a pullback, that's, you're probably going to be harder to do that, because if it's going to go, it's going to go, and you're going to plain out miss it. There will be, I just think the risk reward on something like that, if you get the pop and it's too big of a move, you have to, consider the safety of everything. But then again, everything just starts off again. You could see it here. What do we have here? We have a big candlestick, but we don't use that. We use this. We use this closing prices, and we just drop it there, right? And I have 1, 2, 3. So what I'll do is, this is, we don't even know where that's going. This is inside the bigger pattern. And we have nothing better to do except do this, because we're trading during the day. And I'm doing this for you, so all you have to do is tune into the show, and you get to see the trend lines. And you do get to see the alerts going out too. So daytradingradio.com, a little plug there for you. So a little recap there. If we come down to our 1, 2, 3 channel, and you're on the channel line, you got to have a quad rotation. If you have a quad rotation, you should be on the channel line. If you have a quad rotation, you'd like to have a VWAP if you don't have a channel line, or divergence. The candles, we don't put our trend lines at the top of the wicks or the extensions. I would say 90% of the time. Sometimes you will get an outlier that works, but most of the time we're going to just kind of stick to what is working and let the channel, it'll tell you where it should go. After about 3 or 4 touches, you should be able to identify it. And if you see any outliers or any type of pops like that, you'll know that these are just little traps and stuff. Once you break out of a channel, keep that channel extended. That channel will come back into play, especially if you break out of a channel and come back into the channel. Just like we said back here. Here we broke out of the channel to the upside, right? Pay attention. This is so important. When you break out of a channel to the upside, and you're like, and then we come back into the channel, and we come back into the channel, and we come back and touch that downward trend line again. That will hold. Same thing on the on the situation. If you break down through a channel, and I think I could kind of show, there's a lot of lines here. It could get very confusing after a while, so I apologize for that. I usually clean up my charts, but I was, added a lot more lines here just in the doing the videos and the instructions. So you can see 1, 2, 3. Here's a pivot, 1, 2, 3. At that point, it's pretty obvious. You have a good pivot there. Even if it wasn't obvious, at this point, 1, 2, 3, you would get in. And what happens here, we get down to this level, and we have a quad, and we get a fast little bounce, right? A fast little, explosive little bounce. Now, this is going into the latter part of the day, last 15 minutes. We don't usually like to trade this. This is what we call the murder algo at 350. And when that lines up with a quad rotation, I do a lot of studies on this. And I always look for that. We always look for that edge on the 350 algo that hits because we get big moves on it. But this will happen overnight. As you can see, the overnight channels work just as good. The divergences are number one entries. When we take longs, we'll talk about our, again, taking positions, taking trades. I'm such a, I know my trades. They fall into probably three different type of trades. All of them require me to buy on a pullback into a trend line. So I'd like to buy always into weakness, right? But I would prefer to be in a bigger uptrend and then a little small pullback in a channel and buy into that lower channel in the bigger trend. That is the ideal level. But if not, we're identifying our 1, 2, 3 channels, and we're only trade. We'll only trade when we hit our trend line and we have a quad. And we're going to take those trades, and just like this, we talk about what a bear flag is. Remember, we're in a downtrending market. We don't fall in love with these. We take them. We watch our 9-3 rotation. That 9-3 rotation gets up to 80. This is holding around the 20. You take it off. And now the other side of the thing, you short. The other side, you could reverse. You could do a lot of different things. That takes a special skill, though. I'm not saying everyone can do that. I can sometimes. I have a very hard time. It's like, all right, buy here. That's all cleared. I'm super, that. But when I get up here, I'll take it off and I'll wait for another setup where it does appear to be the most perfect short. So there's certain things that I try to work on all the time because it is obvious that sometimes the good shorts are there, even though you're looking for longs. The shorts are sticking out like, just sticking out at you. So here's the overnight. This is actually the overnight market. We kind of break out here and we kind of chop around. A lot of chop here, other than the divergence here, which is right here. This is a beautiful divergence, 1 o'clock in the morning. Now, even on a bad entry, you get in at 49.09 and it's going to 49.19. These are 10-point moves on the 1 minute time frame at 1 o'clock in the morning. These are very easy to trade. Very, very easy, to just stick around and walking by your computer. Make sure you throw your trend line in. Once you throw your trend line in, like here, it's like right at this point, I'm probably at that point right here, and I'll say, oh, there's another pivot there. I'll just throw this in, and I'll just throw that up here, and I'll just let it play out. And I'll say, all right, now we're watching this, and I'll see if we ever come back down again. And let me see. I'll go by tick by tick. We're up against the trend line. There's not a trade there. Oh, look at a fast breakdown. So we came down real fast. Came down real fast to the trend line here. And we got it oversold, and oversold. So this is actually a what we just talked about. We have the quad rotation. It's not a divergence, quad rotation, and a 1, 2, 3 channel. Now we have the VWAP right underneath us, but right underneath us is not right underneath us like it used to be, just 3 or 4 points underneath. This is 15 points underneath, and that sometimes is a good magnet. So then you say, well, what's the bigger magnet? Is it a good technical setup, or is it going to be the VWAP? So you can see on 1, 2, 3, we're holding that, and we got a nice bounce off that trend line. And look at how fast that bounce and how fast that 80 line got hit. This is something that you're going to gain with experience. Stick around. You're going to start to see the relationship between the price and stochastics. And sometimes, maybe the market will give you 10, 15 points. Maybe it'll give you 5 points with a rotation. These things that this is the echocardiogram that we're watching, these 4 stochastic bands. Very important. This stays under 20. The 60-10 is under 20. That trend is really going to be, every time it gets over 80, it's going to be a bear flag. And that's what we've been seeing here. So these things, easy things to read. You start reading the market like this, and it becomes so much just, understanding like that is it's just no fear, and now you know what you're waiting for, and understanding it. Well, let me see what we're up to here. So, all right. So we came down to the trend line there. Look at that. So we got that bounce there. We had that flag. Here we had this flag right there. Then we break down. We come down to the trend line one more time. Right here. Oh my God. It's like beautiful. And then off to the races. Off to the freaking races on that one. And then we came right down to that trend line. You can tell the algorithm was kind of grabbing onto this because, this is off the previous low too. All right, all right, so as we know how to do a good channel, the other really great pattern that involves channel lines and trend lines is the rising and falling wedge pattern. And you'll start to kind of recognize that just the way the lines are. So maybe, and I think I see one here. We're gonna be talking about this. We see that there's a kind of a trend line here. This kind of comes down to here. It's right before the breakout of this channel, and that's typically where we'll see that a lot of those trend lines start, and then it'll also start at the bottom of the, we talked about this early in the thing. This is where our pivot is, and that's where our main trend line is. But as you can see here, this is actually holding up. This, if we look at this line here, and there it goes here. We have this nice little wedge pattern that's forming. You moved up. We put a new pivot in here. And right when we put that new pivot in here, and we get up here, we put that pivot in here, we could see this. And this actually could come down a little just like that. And that would be like that because we'd already have this in this. Yeah. So here we have the rising wedge pattern. What's good, this is basically the only pattern I really love. There's many patterns. You talk about head and shoulders, which are good, but head and shoulders are reversal patterns. We have, not to go into flags, bull and bear flags and stuff like that, but the wedge pattern, the falling wedge, not the pennant pattern. There's a difference between the wedge and the pennant. The pennant is basically just a sideways pennant. If this was a flag, and this would be the pennant. All right, a wedge pattern would actually go up like you have one of these wedges. You ever stick a wedge in between a door and stuff? It'd come to a wedge like that. And the interesting thing about the wedge pattern, it has a certain angle to it. Now, it's probably about 30 degrees. You start to see them. And there's something about a great thing about a wedge pattern is that it's a great timing tool. It's a great timing. So if you're able to identify a wedge pattern before it breaks out or around that, into that level, like right at this point, you can start to say, this looks like maybe a possible, this looks like a possible wedge pattern, especially if it starts to come down again, right? Kind of right at, let me see, kind of right at that level. That looks like, I know exactly what to do with this right here at that point, but we're going to go in the forward here, and I'm going to show you what to do here. So here's your rising wedge pattern. And the wedge pattern starts at the beginning and ends, if this went all the way up, so here's the beginning, and if it went all the way up, it would touch, and that would be the end. So that would be 100%, this would be 100% of the whole pattern. So if you cut that in half, that would be 50%, right? If you cut that in half, that would be 75%. So right around in between there, around 65% to 75%, 60% to 75% area right here is the golden area for wedges. I would say 80 to 90% of the time a wedge pattern will break down in that zone, and it's right here. So if we extended this all the way out, whatever it goes, I'm not good with these writing on these things with this mouse. Keep everything. But that would be 100%. If we went out here, it would be like 50%. And this would be 75%. And this would be our zone. right in here. This is our zone that we typically break out of a falling, a rising wedge pattern, and the opposite is true on a falling wedge pattern. So an excellent timing tool. If you happen to see the wedge pattern, you know exactly where you want to go short, and if you have a divergence here, which we did right there, a high and a higher high. I mean, that is just textbook that we're going to break down out of this. So the other great thing about a wedge pattern, is also one of the few patterns that gives you what we call a measured move. And a measured move is a projection of where this pattern's going to go, or if it breaks down. And it's very easy. Considering we're channel traders, everything that we see, everything we do is based off of channels. So when I see this, is I see a 1, 2, 3 channel here. 1 pivot, 2 pivot, 3 pivot. This one's, the top line's extended. What do we want to do? We want to drop a parallel trend line down to the beginning of the pivot here, right at the pivot, at the closing prices. And sure enough, look where we come down to. And right when we get down there, that's a 1, 2, 3. You want to be ready to take that trade. That is an excellent wedge pattern, measured move, and it's actually a little divergence there if you look. Look at that 14.3, how low it is, how high it is. The low here, I mean, that is just, it is bang, bang. And this is also what we call bookend divergences. Lots of times you're going to see a channel, and if the channel starts with a divergence, it's going to end with a divergence, and it's going to break out with a divergence. Here's a divergence here. Right here, nice divergence probably. Yes, it is. Nice channel, 1, 2, 3 channel, trade 4, 5, and 6. It wasn't a divergence here. It just was, but it was a combination of the VWAP and a trend line and a 200 period moving average. So the VWAP actually is also a weighted indicator that we have on our methods, meaning that if one of these things lines up with your other indicators, then the criteria is met. And the VWAP 200 period moving average is the other. So this is like a 4 indicator setup. It's a great setup right there. But that gets back to the wedge pattern. Fantastic pattern. I like to send, if I see these setting up, I send them out on the Future Trade Alert networks. And we don't see many of them, so just kind of keep that in mind. If I do see them, I will send them out on the Future Trade Network, Future Trade Alert Network. And for those who do not know what that is, as I trade each day, I have a service where I send out the high probability zones to your phone. And it goes, the members of Day Trading Radio, that's what I run, Day Trading Radio, they all get it as part of their membership. And it's a fantastic service, and again, it's the same thing that we're just talking about here. I identify a nice channel, 1, 2, 3, we're coming down to a quad rotation trend line, VWAP. I'm going to get on the walkie-talkie, which is going to come across your phone saying, you're going to hear me, do my thing. You want to hear it? Actually, I'll show it to you. Let me show you what happens right here. Sorry to break in on this. Hijacking the show. I'm so proud of my Future Trade Alert network because it's so important to be in front of the computer at certain times. And no one wants to be being a slave to looking for a little divergence in the trend line at 2 o'clock in the morning or 9 o'clock at night. You want to be hanging with your kids or your wife or whoever. And you're not going to be, but a lot of us don't. A lot of us love to be trading. I love to search for that. And part of my service is if I see it, I send it out because I know exactly how to identify it, and when we do send it out, if I do take the trade, I announce that too, and talk about the stops and the targets and everything around it, and I usually send an image out with it too. Let me show you before I start talking too much. All right, this is the platform I'm using, the RockStar network, and you get when you connect to it during the day. If I do see the chart sets up, everything's set up properly and stuff, I will send out these alerts. So this, hopefully, you hear this through this computer.
It's 12:20 p.m. here. We have moved down to 51.85. We have a quad rotation, lower trend line area, multiple trend lines. Very important level here. So we're going to watch it. Market's starting to get a little weaker. We still have the overhanging tariff news, so anything can go on here. I'm seeing selling coming in at this point. We're starting to break through that level. But I want to point this out. We're just entering another quad zone. Remember, a quad trend line is what we need. We need quad trend lines at least, or quad divergence for any type of entry. This does look like a good area to start concentrating on an upside bounce.
So that was kind of you could hear that's one of the alerts that just went out. So if I see the setups and if everyone's connected to it, and there's hundreds of traders on it, and if there is a really good setup, I'll send out the image of it. I'll send out the trade of it. It's very fluid. I like to show those trend lines as I send it out. So if we're talking about a level, just like we did today, this could be anything. It's always about the lower trend line too. You see that lower trend line? It's very important. That's what it's about. All right, so let's get back to charts. Anyway, this service right here, it comes with the membership Day Trading Radio, or you could go to Patreon.com if you're not a member, and you can get it for just $20 a month. It's an introductory little thing. It's a lot of people on it. I love it. It's a passion. I usually send out alerts all day while we're trading. We're trading from 9 o'clock all day to 4, and then about 3 nights a week we're trading overnight, probably from about 7 o'clock to almost 12, 1 o'clock in the morning. So I like to send out alerts also overnight, the early overnight session, not too late. So that's excellent. So you go to patreon.com, patreon.com/Day Trading Radio. All right, back here with you. And I think that we're going to probably leave it off at that. I think I wanted to get the main thing out is how important it is, these trend lines, and being able to, wait for your trade and make sure your trend lines are lined up. Such a big improvement. People are having a hard time or over trading. Again, anywhere you look back here, if you see, everywhere I look, I just draw trend lines. It becomes a sickness, I think. I look for those 2 pivots on the top. I drop it down. We're looking at closing prices. The closing prices hold. It's valid. Sometimes you're going to have a one that skips down, but again, it's all about the closing prices. So always wait for your closing price to confirm if you do have a true breakdown or not. And another interesting thing on candles, in this environment too, we can start to identify what I call flash candles, reversal candles, what I call cancel candles. Cancel candles is if something breaks down, and it shouldn't really, but it just seems to have a big breakdown. But the next candle, it captures everything that it broke down with, and they cancel each other out. You'll notice that a lot. And those candles will cancel themselves out, and then you actually draw the trend line to the previous candle before the canceling candles came in. So that happens on occasion. If I see some, I'll point them out to you. But here's 1, 2, 3, big channel here, 4, 5, 6. Here's up here, beautiful divergence, top part of the channel line, right? Everything has a perfect setting. Identifying these little pullbacks inside of a bigger trend were also excellent positions. The 1, 2, 3 channels on the pullbacks. And I think that's where we ended it. That's where we ended today. But it was, so important. Trend lines. If you have any questions, I have a couple other videos out there on trend lines and trends. But I wanted to update you on this. So important. Channel lines. 1, 2, 3 pattern. Find 2 pivots. Typically, they'll be on one side or the other. And again, uptrends and downtrends. Once you have 2 pivots, draw a trend line or draw a line through those 2 pivots, extend it. Take the parallel trend line, drop it to the closing price. That's usually a pivot underneath it, unless it's already extended, and then you trade 4, 5, and 6. And look at these. Look at where they close right on those trend lines. And here's a quad rotation. This is the one we would take right here. as it is a quad rotation trend line, plus a little 200, plus a little better candle right there. These are the best areas to trade. These are where you're going to make money. These are where you're going to make a lot of money. You have what it takes to be in front of it and to have the patience. If you don't, there's always the Future Trade Alert Network. Links in the description. And I'll see you guys. I'll see you guys in the market. DayTradingRadio.com.